Now, whether you're joining us virtually or you're here with us in the room, thank you so much for being with us today. I hope you had a chance to get a coffee. So I hope everyone's fully hydrated and fully caffeinated and that you're ready for the day ahead. So what is wealth? The definition has changed over time, as many of you know, as we have tools that we created it with have also changed. As the world continues today to grapple with geopolitical tensions, increased market volatility, especially in the last 3 weeks, and a high inflation, today we ask, how should we put our money to work? And where should we put it? The conversation is all the more important and timely as we keep a very close eye on the turmoil in the financial and banking sector. We have an incredible lineup of speakers this afternoon and this morning. We'll have also a special recording of the popular podcast, Marin Talks Money. I assure you this is going to be a fun one, hosted by Marin Somerset Webb of Bloomberg Opinion. So we want you to be part of the conversation today. We'll be polling. Here's how it works. Please scan the QR code on the screen right here behind me. You can respond to polls or also send in a question for our moderators. Please do send them in and we'll make sure to ask those questions to our guests. So let's practice that. This is the hardest question you're going to have all day. Get your phones out. This is like CFA level 4. All right, the question is, if I won the lottery, all right, today I would A, keep the cash, 2, invest it, C, donate the money, D, travel and shop. We should have like, what would you be buying? You can, no, only one, I think. Don't cheat. All right, so as it settles, I mean, this is actually quite hard. This is like, do I buy AT1s at banks or not? So it just takes a couple of seconds to settle, and we have invested. All right, we have a serious crowd. Not many people saying, I'm going to shop until I drop and travel. So look out for results on the poll. You can see them here, but I think you can also see it on your screen. Please also see a Bloomberg representative just outside this room or scan QR codes if you're interested in a complimentary subscription to Bloomberg. One final point, please also do engage with us on social media. We're active there, and the hashtag is Bloomberg Invest. Thank you for joining us. What a week it's been. I know a lot of you have had a pretty hectic, maybe traumatizing week. 15 years of the global financial crisis, and we witnessed over the weekend the downfall of one of Switzerland's largest banks. Now, Bloomberg journalists, as you know, have followed the twists and turns of the story with smart analysis and smart insights, and I'd like to welcome to the stage our host for today and our editor-in-chief, John Micklethwaite, to discuss the latest crisis in the banking sector. So, John, thank you so much. John, you wrote a really smart piece, and I'm not just saying that because you're my boss and could fire me at any moment, but you wrote a brilliant piece with Adrian Woolridge on the banking sector, and it's a piece that I haven't really read before because it looks back almost to the history of banking and how it's going to be changed going forward because of what we lived through in the last 3 weeks. You talk about this, you were in Scotland, and you talk about this like wall of misery or mystery.
Yeah, I was up in Scotland actually with Marin Somerset Webb, who you'll hear later, who's much better at wealth creation than I am. But if you go to Edinburgh, hidden away in the financial district, there is a place called the Library of Mistakes. And it's a completely amazing museum set up by, it focuses on financial mistakes. And you can see in one corner a shirt signed by Nick Leeson, who actually today we have a story saying has just taken up a job as a kind of private spook. And on the other hand, there's a picture of Charles Ponzi, and the walls groan with books about financial disaster. I think one of them written by me, but most of them much better, with titles like, where are all the customers' yachts? And what's interesting about you sit there is it's not a bad place to think that one of the themes of the museum is that in things like technology and engineering, progress is linear. In finance, it's cyclical. And even if you're me, I think I started, the first big story I ever covered was the 1987 crash. You just see the same themes coming back every single time. You see financiers running off who previously loved the free market, except when it happens to them. You see regulators tending to fight the previous war. You see people who condemn capitalism suddenly claiming that it's all come to bits. And each time you always end up with new rules. And this time our guess is that there will be some new rules, I think. There will obviously change things like the level at which they study banks in America. If you think Silicon Valley Bank had $200 billion of assets, which by most people's definition is the sort of bank you should be looking at. America only rather sort of strangely, chose to look at ones above 250 billion, which are enormous. And so you had these problems endemic. There will be some things they fiddle with that. But the main thing we think is that what's happened is this crisis has just come at a time when mercantilism is on the rise. And I think that what will happen is that governments who already think about technology as a core industry are going to start seeing finance much more so.
What have we lived through in the last 3 weeks, actually? Is it, a bank run because of liquidity? Is it panic in the markets, or something more underlying?
I think it's really liquidity. If you look at the capital ratio, if you look at the big things that went wrong last time, you look at the last crisis, basically it was all about asset quality and stuff. You had enormous amounts of slightly dodgy debt, all those derivatives, all that subprime loans, piled up on very small slithers of capital. What's happened since then is the central banks, regulators have pushed people to increase the amount of capital. So if you look at Credit Suisse, it actually had quite a lot of what you would regard as kind of safe capital. And this time the problem is liquidity. And again, you go to the library of mistakes. For 300 years, we've had bank runs. That is really what happened this time. People wanted their money back.
If you have more rules and regulation, I mean, those could also be classified as a library of mistakes.
Yes.
Are they going to regulate private equity, venture capitalists?
I think this time, in terms of our basic idea is this time they probably won't do that much, because there isn't as big systemic mistakes. There's the two problems. The main thing is what you classify as being a bank. And obviously in America, they went way too high, because 250 billion, we've seen that. I think more generally, there is a kind of worry, and we haven't seen it yet, that there are all these areas where non-banks are operating. You mentioned private equity, hedge funds, insurance companies are in part of it, all the dark pools of capital. And every time you have a financial crisis, it's always about debt. One reason why the dot-com crisis didn't do that much damage is because there wasn't any debt in it. And this time, the debt isn't just in banks. And we haven't yet seen where people have had to mark things to market.
Yeah, when you look certainly at Credit Suisse, UBS, it's incredible to think of these large banks with footholds all across the world, but then it's one national entity.
You think of our lives, obviously you're way younger than me, but you think most of our lives, Credit Suisse was the epitome of the boring bank, is that it had an exciting bit, which was the American CSFB bit when I was kind of growing up. The rest of the time, you had a conference like this, and I've actually seen it happen. The chairman of Credit Suisse would arrive, and gradually what would happen, and obviously there are people leaving quickly because I'm so boring, but the chairman of Credit Suisse was always an absolute guarantee to have a lot of people at the beginning, and then gradually people would disperse, because he never said anything that was interesting. And Credit Suisse was supposed to be the byword for total boredom and sort of solid things in the middle. And now suddenly it got itself into trouble. I think if you look, it's been that pattern of pretty much every scandal that has happened over the past 20 years. There's been a bit of Credit Suisse in it. And I think that's why, on the one hand, you should feel sort of sorry for Credit Suisse, and we can come on to the issue of whether UBS has actually got a bargain. But you should feel sorry for them because they did build up all this capital, they had all this protection, and they got pulled out by the oldest trick in the book, which is liquidity. But on the other hand, if you keep on getting caught in every scandal, and on top of that, you keep on having your accountants raise questions, you say things which aren't entirely true, you do start that. So I don't think you can just blame it on a kind of liquidity crisis. There was a real problem of trust. You only want to take your money out if you don't trust an organisation.
But it's also amazing to see such a small country, frankly, with such a small regulator, having to suddenly put this merger together in these two systemically important banks.
I think to me, that's one of those moments where, this is where we could be totally wrong. But what Adrian and I looked at is, you have had this big change. You remember back in the last crisis, we all thought this is a temporary government intervention. And also on top of it, you had China, the EU, and America all working together. Britain was in the EU then. Now, you've got three competing trade blocs. The whole atmosphere is very, very different. And on top of that, you've got governments, the Swiss decided, against a background where it's pretty much impossible to make a kind of consumer argument, but it's a great thing for the biggest bank to take over the second one. The Swiss decided they wanted to keep Swiss finance Swiss, punished some bondholders we were discussing earlier, which you might not have expected. But and I think that will probably set off a chain of similar thoughts in places like Germany. We've got Deutsche and Commerzbank, and maybe even on a European level. I think you're beginning to see, if you believe in having national champions as much as the people who are currently running the EU do, then I think it's a very short step from thinking that way to thinking we must have a European bank which is somewhere near the top 5.
I think we actually have a great Bloomberg chart looking at the AT1s being completely wiped out. So that's, you know, it's great.
This was supposed to be the relatively safe stuff.
Not so for the Swiss.
No. The Swiss decided, strangely, that it was more important to look after pensioners.
So for Switzerland,
who were equity. It's very good to look after pensioners, lest you and I get depicted as heartless.
The Swiss authorities basically see banking as strategic. Is that a turning point? Are we going to see other governments do that?
Maybe go all the way back to Orson Welles and talking about the Swiss being good at cuckoo clocks and banking. But perhaps they always was strategic. But this time they made it really clear. This is a strategic industry. I think the interesting comparison is with Silicon Valley Bank. You look at Silicon Valley Bank, it was not, I think it's very difficult to claim it was systemic in a normal financial way. But it was systemic in terms of the tech industry. And if you're Joe Biden, you're sitting there, you've labeled just about everything that has come your way by American. You've gone on, you've spent fortunes encouraging chip makers to come back to America. You've tried to set up American tech as being the great reason why America will outlast and outfight China. And then suddenly the bank, which is supplying those people, gets into trouble. That was the key of it. I think it was as much about saving American tech as it was about finance. You know, even though it was quite a big bank, Silicon Valley Bank, I don't think you can claim it was systemic in the same way as, I don't know, Lehman's was.
But we've been talking about consolidation of the European banking industry for over a decade. Is UBS just the first? And how are the US big giants, JP Morgan, Citigroup and others looking at it?
I think the Americans, I saw an American banker last week who said, look, this is, honestly, get on with it. And there's two things about that. One, it's absolutely right, is that you talk to any of there probably maybe some here, but any of the people who run Europe's main banks, they have a list of people they want to merge with if the rules changed and you were allowed to go cross-border. And it does, economically, that makes sense. It is very hard to have a currency union without a fiscal union, again, cue German outrage, and a banking union. It's very weird at the moment that you have these banks sort of stuck in different bits of Europe. And it's also, I think, something on the front that, the biggest 5 Western banks are all American. And now you've got the first national champion coming out of Switzerland. Well, as I said, maybe Germany thinks that Commerzbank and Deutsche Bank go together, or maybe Germany says, actually finally confronts the reality of being part of a currency union and says, maybe we need pan-European banks that could stand up to it.
So, but you believe we're going back to mercantilism?
I do. I think we're already there, and that's what's awkward about this crisis. Is it's landed just at the time that people are thinking entirely in terms of blocks, and that I think this will compound it. And I think the worry is that yes, there are ways you can see if you're Joe Biden, it makes sense to have. If you've got American tech on your side, you want to have American finance as well. But the worry is if you want to see mercantilism in operation, go and look at China's banking sector.
How much are central banks to blame for this banking crisis?
The underlying dynamic of did they raise rates too slowly and have they raised them too fast? The answer is, the people I think will look back and say they had to raise them quite quickly because they kept them low too long. So yes, that bit. I think the people who now jump onto the next stage will say, well, we should stop, I think are wrong. Because I think the basic, you just saw the inflation numbers this morning from Britain. Inflation is still a big problem. And the idea of stopping that just to stop a little bit of pain in the banking industry at the moment, to me, feels wrong.
Is this a change actually for capitalism in general?
I think it is underneath it. I mean, you look, there have been great cycles in finance where things go backwards and forwards. But in terms of the rhetoric that you're hearing now about banking, it is completely different to what you were hearing even back in the financial crisis, but certainly very different to what you were hearing before that. and it's, banking always goes backwards and forwards a bit. Just look at the different ways in which Glass-Steagall has been imposed, taken away, sort of brought back. Maybe another bit of it may come back again. There are these different trends in banking which always go backwards and forwards. But at the moment, for bankers to sit there, or for the investment community to say, look, we're global, well, the answer is you're not that global because you're not allowed to take over each other. But secondly, actually, the rest of the economy is going regional at the moment. So you perhaps should not be surprised when governments start thinking about you that way too.
Is the banking crisis over? This is the kind of question after the turmoil that we saw in the last 5 days.
The simple answer, none of us know. My suspicion is that rates rise, you're always going to find some people who've got difficulty. My guess is that the next lot of difficulty probably will be in the non-banking sector, where people have been able to hide things more in terms of how they value things on their private, especially private institutions.
John, you're a great student of history, actually. So how do you think historians will look at this period, 2023?
I think they might look at it as a sort of second. They will look at it in the context of two things. One as being sort of part two of something that happened back in 2008, 2009. I think they will look at it more generally in terms of we had a period of open markets, and somewhere during the Trump presidency, and certainly compounded by the Biden presidency, we went from a global world to one that was much more regional. If you go to Paris or Berlin at the moment, it's a bit like visiting the kind of English countryside in the 1970s. All people talk about is the IRA, but it's not then about terrorists. It's about the Inflation Reduction Act. The Europeans are spitting mad with the idea that Biden, yes, he's introduced green subsidies, but he's also said those only apply if you buy American-made stuff. And if you keep on doing that, the Europeans, some of them are mad about it, others sense opportunity. They can now build the fortress they wanted to build always, and which was stopped by evil Anglo-Saxons who used to be part of their union, or whatever it was.
John, thank you so much.
Thank you.
It's a great piece, so you can, we'll push it out on social media, but you can also find it on the website.
Thank you.
Thanks, John.